Okay, welcome to the Swing Trading with Cycles channel. We're going to do a uranium review here. It is October 4th. So we have our Tuesday full candle, and I always say that's important because you either get a confirmation of the move that happened on Monday, you get a rejection, or something neutral, like an inside day. So we're going to look today at Energy Fuels, Bannerman Energy, Deep Yellow Limited, and Elevate Uranium. All were requests. And I think and we'll also just take a look at CCJ and just general market just really quickly to get a sense of that. But we'll focus in on these four specific uranium names, and a couple of these are Australian uranium stocks specifically. And just note that these are the charts, like Elevate, for instance, this is on the A6, and the same with Bannerman, for instance. UUU is U.S. traded, and Deep Yellow, I believe that is as well. And so, well, actually, let me just double check that. No, that is from the A6 directly as well. So that's important to know. So UUU is the only one, Energy Fuels, that is traded in the U.S. But these do have over-the-counter OTC sort of options in the U.S. In some cases, the charts just don't have a lot of structure, which is why I'm using the sort of native exchange, which makes sense. So let's get into these specific names, right? But before we do that, we'll just quickly look at the broader market, and we'll look at the futures. And what you can see here, this is your daily chart right here. I'll zoom in here. This is your daily chart. So we opened in a red day. So it's about 9 p.m. as I'm filming this. And so we've been trading for about 3 hours now. It's just a red inside day. We have not made a new high. These details are important. I mention all of this because the direction that the broader market goes is the direction that uranium is going to go. That's just how the move happens, right? This has been 2 strong days, but this was a relatively strong rally. To be fair, none of these days were anything as powerful as these two. And we also have a weekly swing low, but it's unclear if this is going to be, any kind of more sustainable bottom than this. It's way too early. And so that means uranium could definitely suffer as well. And so let's get into those uranium names. So we will start with the annual chart. And so the annual chart here is every candle is a full year of price action. And so we can see just big picture. These are all in, big picture. They're in really big downtrends, right? Now, the important thing is that they've all reversed those downtrends. And I'll tell you, some of them I like better than others, and I'll explain to you exactly why. Before we do the chart, though, I do also want to just call out the market cap matters, right? And so Energy Fuels has a market cap of, and this is TradingView, the software platform. Energy Fuels has a market cap of $1 billion, right? So that's Energy Fuels. Bannerman has a market cap of 284 billion. So, less than a third of what Energy Fuels does. Elevate Uranium has a market cap of 130 million. And Deep Yellow has a market cap of about just a little under 600 million. So Energy Fuels is definitely the largest of these, followed by Deep Yellow, which is about 60% its size. This Elevate name is really tiny in terms of market cap, and Bannerman is also pretty small, relatively speaking, less than 300 million. And what that means is it takes a lot less capital you get bigger moves potentially. And the reason is very, very simple. And for context, CCJ has a market cap of about 11 billion, somewhere like 10.8, depending on where it closed today. And so that's important to understand because when big money pours into names, that's how they're thinking about it, right? What kind of piece of the company am I getting? And that's all about market cap. So that's important. I always say it's important to understand how the financials work as well. If you have the ability to walk and chew gum, you can look at the charts and understand the financials. And so that puts Elevate in a really nice position because it could increase 10x and that would still make it only slightly larger than what Energy Fuels is now, right? Right, that 130 million could go to 1.3 billion, and that's not even that big a company, right? And so that's your a 10x return on your capital, and so that's the way you want to think about it. And so you combine that with the charts. So let's start with Elevate. I mean, this thing just basically consolidated essentially for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 years more or less. This is kind of the start of your breakout year. I mean, imagine being long this name this whole time. My goodness, right? And then we have this nice rally. Let's look. Let's just see what the percentage, right? Like from this low to there, that's a 2,000% rally. And let's say like, there's no way you caught the bottom. You're not going to buy this. The way you trade something like this, think about these long time frames. You've had this exhausting decline and then this just sideways, right? Because this is actually a pretty big decline. So you have this candle. What year is that? 1993, right? Nice big bullish year. And then you have an inside year the next year, 1994. I mean, really, all of these years, like this is the year where we break below the low of this. And actually, let me just draw that out so that we're clear. All right, so that's your low and that's your high, right? That's important to understand. All of this price action right here happened in the range of this 1993 candle. It's the same way when I talk about that happening in a daily chart, a weekly chart, except this is much more powerful because, again, each of these candles is an entire year of price action. And so the way you would play this kind of move is, wow, we've been consolidating here for all this time. A break above here, if you want it to be, this is, I guess, you could argue this is an early entry or a late entry, but above the high from this year, so 2004. So 2004, we make a high of $4.18. So if you got in there, right, you still enjoyed, a huge rally, like 900%, 800%. Notice if you bought the bottom, from this low, from this year here at 2005, obviously you had a much higher return. But 800% is nothing to sneeze at in 3 years. That's not too bad. But then you had this massive rejection in 2008. We all know what happened then, the financial crisis, right? The global financial crisis. Then you had this excruciating inside year that was green. So if you bought the open, you did make money. Like, you at least closed green. Then you had this other inside year. So basically 2 years inside this big range. And then the bottom falls out in 2011. That was, a lot of names got crushed that year. And then we've just cascaded lower. I mean, so let's see, what is the percentage decline, let's say, from like this close to down to like here. So that's an 88% decline. Yikes. And if you got all the way down to here, that's a 94% decline. Yikes. And so you then had this excruciating, let's say so the way to think about how you avoid being a bag holder, right? If you wanted to give this thing every chance in the world, if you wanted to give it every chance in the world to prove to you that it was going to be bullish, you could hold out, right, to the low of this year, right? Like, let's say you caught this trade here, or you even got in here. There's going to be price action inside the year that, might be a signal. And you've just ridden this whole thing up. If you could say, you know what, I'm going to give it a really long rope, and I'm going to put my stop at the low from this year, 2007, right? And so if you did that, right, that low was 1381. You would have saved yourself a lot of money, right? Now when it comes back into this range, you feel like an idiot. You're back up here, like, oh, I got stopped out, and now it's going to get away from me. And then, of course, the bottom falls out. This thing bottoms out at 2 cents, like many, many years later. But I mean, even down here, we get a low of $1.75. And remember, you got out like in the mid 13s, right? So that's the way to think about it. Again, so this is a yearly chart. You probably don't want to give a trade that much room. It's the same principle though, I guess. So to put a finer point on it, this is a yearly swing high. It's a massive sell signal. It means get out, right? If you didn't, and think about the way that happens, to have a yearly swing high, you need a daily swing high. I mean, in reality, you need like a 5-minute swing high first, then an hourly, daily, weekly, monthly, quarterly. Then all of a sudden, you're below last year's low. Now, sometimes you recover, and again, this looked like it was going to recover, but then this was really just a lower high, right? And that's how downtrends work, right? You get that lower high. So this is a really good illustration of how you want to be careful, right? Of how you can, and again, this is at the biggest time scales there are. You maybe want to give it a little bit less room, maybe set it for a monthly swing high, because that tells you you're going into a long-term cycle decline, most likely. Sometimes things recover, and that recovery can be very violent because you end up getting a short squeeze. So that's important to understand, that you want to be flexible, you want to be nimble, that if it looks like it's going to be actually a false breakdown, then that's actually a big opportunity to make money. So now riddle me this, right? This range, right, was so important. I mean, we kind of like scraped the bottom along it, right? Around that 238 level. So that tells me that this thing is going back to 238 at some point. And I would imagine that level becomes, and I always talk about zones, not levels. I don't mean specifically 238, but call it like the mid twos, right? Or even like that tells you, and that's nice upside from here, right? That like you could see a path to $2 once we get through this like, long-term cycle low that, we've been talking about, the 3-year cycle, that, larger, like basically that the entire market is going into, right? Oil is declining into a 3-year cycle low, equities, pretty much everything. And so if you think about this, that this is a nice little 4X, and the question is like, when, right? And I think it probably will be very rapid, but again, after we print that cycle low. So it's also a question of at what level that cycle low. So like, if we fast forward to this year, right, we have an ugly doji of a year, like nothing's happening, right? So we've had a high at 82 cents. So we're sitting here at 48 cents. And we've had a high at 82 cents. So that's a pretty big difference. And we've had a low at 34 cents, right? And so not much is happening. And so it's unclear when we're going to get the cycle low, and we'll get into lower time frame price action to start to look at that. But given how important this range was, right? And look, it got right up to here. Again, it's a zone, not a specific level. Poked up. I mean, that's important. Like, this high was made in 1993. And then in 2007, we get back to that level and like, I can't do it. Then we get a massive reversal the next year. That, again, is a huge blinking red light. Because you can always re-enter the trade, right? But, and I'll, like, there are assets that have done this, right? This year, they've made yearly swing highs. You have to be careful with that, right? This is a perfect illustration of that. This is the kind of thing that can happen after a yearly swing high. Doesn't have to happen, but you have to respect risk. You have to understand how to mitigate that risk. And so, again, this has been a big nothing of a year. Have we made a new high? So last year, so we did make a new high. But again, then we can't come back and just sort of dojied out. So, that $2 area looks, we would expect the 3-year cycle low to print somewhere around, Q1 of 2023. So you would expect $2 by the end of 2023 if that cycle low does come, and you would expect that to be very rapid. So that's elevate uranium. That could be really interesting. And again, that makes a lot of sense. A 4X increase still has this thing at like, so that gets it to like 500 million, right? Which is not a crazy number for a company, especially as we're looking at these other ones. And again, obviously there are revenues to consider, etc. But that's like your high level scan. So let's look at Bannerman next. So Bannerman is interesting. We have our first year was 2005, and we had just massive upside. My God, that is just beautiful. A nice 8,000% move from the bottom. That's beautiful. And then we get this massive rejection, but we get this wick, gets people excited, right? Like, okay, we're coming back. But we don't really come back. That next year, we have an inside year. Sounds familiar. It's like similar to what happened with the other one. And then the bottom kind of falls out. In this case, this is your swing high for the year. And I hope this is making sense now. Once you went below this low, that was your swing high for the year, right? That doesn't mean you had to have this like cascade lower, but that is exactly what happened. It's not the same exact shape as Elevate, but same principle, right? This is a lower high, this is a lower high, right? And then we just keep cascading lower. This is a lower high, that's your lower low. And then we kind of scrape the bottom, and we have a nice little reversal year, the year 2020. Because look at this little tiny candle. We go way below it. We bottom at 15 cents, my God. And then we just go shooting back up. And then 2021, massive follow through on a yearly candle. I mean, look at like this is incredibly bullish. In the same way, just to be clear, the Elevate chart, same idea. Massive bullish outside candle for the 2020, and this is the same pattern you'll see for all uranium, right? And so we now have good follow through, and now we're just sitting here a red inside year, right? So we had a high at 325 and a low at $1.50, right? And so in this case, the swing high was triggered when we went below $13, right? And so you imagine that level is going to be significant to the upside. I think before we get there, we'll probably have some wood to chop around here, like in this call it the mid eights, like around here, price aggregated here for a little bit for a few years. So you might expect a little bit. But I mean, we're sitting here at $2. Now, like most proximate, we need to get through the high from last year at 431. That obviously just gives you a 200% gain right there. So that's those are the levels. That's the way to kind of think about it. We've really just not done much this year. We haven't made a new low. So what we really, again, following that principle, we just really needed to stay above the low from this year, or I should say we need to stay above the low from this year at $95. Not everything has managed to do that, right? Silver fell well below its low from last year. And so that's an important signal. That's how you think about things on the grandest of sort of time scales. And then if we look at Deep Yellow, these are all very similar situation. In this case, my God, this is one of the most bearish looking candles you can ever see on any time frame. And to think that this, and the idea that this is an annual candle is really quite remarkable. I should say, bearish candles or bullish candles for that matter don't always follow through, right? Sometimes you have a bearish candle that looks like this, but then it doesn't follow through, it doesn't collapse. In this case, that's exactly what it did. We went lower, then we had this year that faked people out. This was a lower high, and then wham, the coup de grace in 2004. We rallied a little bit here, but what is this? It's a lower high, much lower than this one, which is lower than that one. Consolidate for a little bit, and then this one, this is important, right? When you think about the long-term cycles, this one actually made its low in 2016. It never made a new low in 2020. Now that's interesting because that is also a sign of strength. So I like Deep Yellow from that perspective as well. And this is also a relative, is this one of the, yeah. So this is a $600 million market cap. So on the higher side, especially compared to these, but in less of a downtrend, less kind of vertical, you can see you did have more of this consolidation. I mean, this really looked like a bear flag ready to break down. If you think about it like in real time, these, monster hammer, this monster hammer is like think about before this year, this certainly looked like a bear flag. Like, is this hammer going to be able to hold up? Now, it's still we could retest that 6 cents low that we made, that 6 cent low in 2016, but it looks kind of unlikely. This is just an inside year, a doji of a year, kind of similar to Elevate in that sense. And we really need to get above the high from last year right? Which is, puts you in the 135, 134, 138 neighborhood. And then you imagine we're going to have a lot of wood to chop in this zone around 880. That doesn't mean we'll necessarily get all the way up there, but that will be a level that start to, like, you might expect some resistance. That might mark some kind of long-term cycle high. But that's a nice upside. Obviously we won't go there in a straight line necessarily, but that could be some nice upside. And finally, we'll look at energy fuels. And so this one, oh, wow. So 2007, it starts trading, ugly red year, and then we just get follow through downside, right? Like price just continues to go lower, and then we consolidate, right? We have an inside year. We don't make a new high, don't make a new low. Then we push higher. This is a bullish outside year. Didn't get any follow through though, and this is another important concept. And so let's see what level that is so that's $79. That's interesting. So this here, right? Like this candle at one point was green. And we know that for a fact. How do we know that for a fact? Well, because this is a red candle, which means it opened here and it closed here, right? So specifically, it opened at 44.61. That's right up here, right? And we know it closed at 13.63. So it opened at 44.61. But we know the high was $80, right? So that's important to almost put yourself in that mind frame, right? It opened at 44. At some point it was at 80, which means at some point it was a green bullish looking candle, right? At some point it made the move from 44 to 80. That's really bullish looking. You're thinking we're having some massive follow through off of this bullish outside year. This is going to be awesome. You can see emotion starting to run in, and then we start to fail, right? This starts to pull back, and specifically, remember I said we opened at 44.61, right? So once we went below 44.61, the candle goes red, and then the bottom falls out. Now, we don't make a new low below this candle in that same year, so that's 2011. That was obviously a bad year for uranium in general. So we kind of closed the deal in the next couple of years. So you can think of these candles combined as a compound candle of these candles almost, right? And this is just downside follow through essentially, right? This is just your lower, this is your lower low, that's your lower high essentially. And then we just keep rolling downhill, right? We consolidate here, and then we have that familiar story, bullish outside year. Then we have follow through, bullish outside year for 2020. Then we have follow through in 2021, but we do pull back towards the end. That's what this upper wick is. And now we've had a doji of a year. That seems like a similar theme. And that's why that's important to know that not a lot is happening, and that's okay, right? Because that's how markets work. Markets trend and then they consolidate. They trend and they consolidate. Right now, it appears we've made a major long-term low a couple years ago. In one case, it was in 2016 even. And now we're moving in a new uptrend that should last for a long time. And so this consolidation is something to get excited about because it means it's setting up the next trend leg. And be patient because we may see even lower prices, have some dry powder to be ready for that next trend leg. You almost think of reverse symmetry kind of up, right? And so that's exciting, right? Now, for this one, I will caution, I suspect there's a ton of dilution here because this thing has a high at 240 and we're down here at $6 or $7, right? And so you think about the multiple on that, and again, this is already $1 billion company, right? Can it get to a $25 billion company? Maybe. That's what you would need to happen for you to get a 25x increase, obviously. So you want to be mindful of that. But play the chart. It's clear that we're going to have, it would seem, we're going to have some wood to chop around here, right? The high from 2021 was 1139, and that's not a coincidence. That's because you had this level that stop price here, price couldn't get above it here. So that's not super surprising, right? And we're sitting down here at 682. So it feels like we'll be dancing with this level at some point in 2023. And if we can break through, then you can see a world where we start to maybe get into easily like the 20s. Again, there's a lot of dilution, so it'll take more money to move this again than something that's like 200-300 million. So that's important to be aware of. And so we'll close out with just looking at we'll kind of zoom in to look at the monthly charts, because that's like big picture. And again, I wanted to start with that big picture, because if you see that all you have is an inside year, then when you zoom in, you're just looking at noise, kind of, to some degree, right? Now, obviously, you could take shorter term trades. That's your, everyone's prerogative. But on the longer time scales, and when I'm talking, I'm even just when I say longer time scales, I'm talking not even that long, like next 2 to 3 years. Like we're setting up for a big move. It's just not here yet. And this is where the multiple time frame analysis comes in, right? That one candle that we were looking at, it's all these monthly candles combined, right? And so it makes sense. These things are stacked side by side, and what you see on that higher time frame is the one just singular inside candle that's just doing nothing, because that's what this is doing. It's just chopping around. Chop, 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 chop. But again, these have all, you can see this swing high is here from September 2021 for Deep Yellow. This swing high is from November 2021. This one is from October 2021. So these topped out at different points. Elevate topped out in April 2021, 2022. So that's important, because that's another. I started this thing off by saying I liked Elevate the best because of the chart and also just the market cap. But this thing is most bullish because it has had the most right translated long-term cycle. That's a way to think about it, right? It means it's rallied for more months than any of these. Because again, all of these topped out in 2021. This thing kept rallying until April 2022, which is the same thing that CCJ did, which is one of the more bullish ones. And I mean, it didn't make a massive, a significantly higher high than the one it made in September 2021, but at least it did come back and test that. Whereas these just kind of chopped around, flopped around a little bit. And, and if you use them, and just quickly, they're all green on the month, so that's good to know. And important just to know your levels, right? So Bannerman opened at 195. Energy Fuels opened at 630. Elevate opened at 58 cents. And Deep Yellow opened at 81 cents. I say those levels because we need to stay above that for this candle to remain green. So if we start to see a pullback in the broader market, those levels are going to be important, because once that starts to once we go below that level, we begin the process of going red, just as I outlined in that annual chart, right? Like the way the candle started as green and then we went red, and then things just got kind of worse from there. That's how you understand. That's how you kind of mitigate risk. And if we look on the weekly with, a couple days in trading now, we've got nice little swing lows here. So swing low for Energy Fuels. Yeah, so we do have a swing low for Bannerman. This is just a much stronger swing low for Energy Fuels. I mean, the reason I say that is, look at this. The low of this week's candle is above the high of this candle. That's pretty bullish. Whereas this started as an inside candle and then it broke above, which is fine. And the same thing for Elevate. Started as an inside candle. It's made a new high. Deep Yellow is actually the weakest on this. That's interesting. So Deep Yellow has actually made a bullish outside candle, weekly candle. This is after, I'll actually zoom in on this one. This is after actually a pretty deep pullback. So yeah, wow. After pulling back about 38%. Well, actually, if you go all the way down to the low that we made this week, that's 40%. So that could set it up for a pretty sharp rebound, even if it makes a lower high, could easily get back to above $1 even, let's say. That's like 20-25% from here. But again, this is all noise. Again, this is your weekly chart, but again, that all rolls into that, that annual candle where we're kind of doing nothing. And your question is always, is this low here that long-term low? And for us to know that, we're going to have to make some higher highs and also make some higher lows. So it's going to take some time to kind of understand that. The important bit though is you don't have to worry about FOMO. When the rally happens, it should last for years. So it's going to be okay. Like, not getting in from 1 week versus the next isn't going to really matter, even from 1 month to the next, right? Because these things rallied in some cases 20, 25 months. So you don't have to get in on month 1 or even month 3 necessarily. But we'll definitely continue to update on these. And if anyone has any other names that they're particularly watching, I'm definitely happy to review them. If anything, I'm happy to have found Elevate. I'm definitely more of a generalist, not necessarily specifically focused on uranium or any specific asset class. And so always happy to hear some suggestions, look at the price action, because these skills are universal. They work for everything. And so always like to kind of take a look at charts. So let me know what you're thinking in the comments if you have anything that you'd like me to review. But that's all we have for today. Thank you for sticking with. And if you haven't already, as I definitely like and subscribe and hit that notification bell so that you get those updates. Because as I say, I definitely put out videos that are timely as things are happening, because it's important. I know people, for people to stay abreast, because things are moving fast.